Oke, selamat pagi ya Bapak Ibu ya. Kita akan memulai webinar pada hari ini. Good morning everyone. Good morning Nicholas, Billy, and Mingwei, our speakers today. Selamat pagi Bapak Ade Bungsu, Ketua PAI, dan selamat pagi Bapak Ibu peserta webinar pada hari ini. Perkenalkan, nama saya Ronald Sajuti. Hari ini saya akan menjadi moderator untuk webinar pada hari ini. Semoga semuanya berjalan dengan lancar dan bermanfaat untuk kita semua. Sebelum acara kita mulai, saya akan bacakan terlebih dahulu tata tertib webinar pada hari ini. Oke, yang pertama, peserta harap merename namanya dengan format seperti yang sebelumnya sudah keluar ya di slide ya. Namanya, nomornya sudah diberikan sebelumnya oleh panitia, misalnya nomor Bapak Ibu adalah 001 dan nama Bapak Ibu misalnya Alex, maka di formatnya itu akan menjadi 001 strip Alex gitu ya. Yang kedua, peserta harap mengisi form presensi dan feedback melalui link yang akan dibagikan melalui chat. Jadi nanti ini untuk merekap kehadiran Bapak Ibu untuk sertifikatnya gitu ya. Yang ketiga, untuk kelancaran webinar, kamera dan mic seluruh peserta akan dinonaktifkan. Yang keempat, pertanyaan dapat disampaikan melalui chat atau sesi tanya jawab. Bapak Ibu bisa menggunakan bahasa Indonesia saja untuk menyampaikan pertanyaannya, nanti akan ditranslate oleh saya maupun oleh pihak dari konsultan gitu ya. Yang kelima, di akhir acara akan ada sesi dokumentasi dan diharapkan seluruh peserta mengaktifkan kamera untuk foto bersama. Yang terakhir, mungkin nggak ada di sini, materi webinar pada hari ini sebetulnya bisa Bapak Ibu download melalui link yang sudah dibagikan oleh panitia kemarin. Mungkin bisa di-download terlebih dahulu untuk mempermudah Bapak Ibu dalam mengikuti webinar ini. Karena webinar pada hari ini cukup teknikal, jadi ada baiknya kita download dulu gitu ya, materinya gitu ya. Tanpa berlama-lama, saya persilakan Bapak Ade Bungsu, Ketua PAI, untuk membuka acara webinar pada hari ini. Silakan, Pak Ade Bungsu.
Terima kasih, Pak Ronald.
Ya, terima kasih, Pak.
Assalamualaikum warahmatullahi wabarakatuh. Salam sejahtera untuk kita semuanya. Semoga semua dalam kondisi sehat walafiat. Harapan kita juga semua teman-teman dan keluarga dalam kondisi sehat walafiat di pagi hari yang cerah ini. Terima kasih pada Pak Ronald dan teman-teman dari Persatuan Aktuaris Indonesia yang telah melakukan inisiasi untuk mengadakan mungkin kesekian kalinya ya Pak Ronald ya, yang bertema dengan IFRS ya. Kita ketahui bahwa IFRS 17 ini semakin dekat implementasinya, tentunya kita ingin berharap juga kepada semua teman-teman khususnya di fungsi aktuaria dimanapun kita bekerja, khususnya pada sektor asuransi umum. Kita ketahui bahwa IFRS 17 ini jauh lebih kompleks dibandingkan IFRS 4 yang sebelumnya ya. Harapannya dengan adanya webinar, workshop, dan seminar ini tentunya membuka wawasan kita dan juga menggali pengetahuan tentunya dari para praktisi ya. Kami juga mengucapkan terima kasih kepada para speaker, Pak teman-teman dari Actuarial Solutions, Nicholas dan teman-teman ya. Terima kasih untuk waktu yang diberikan untuk kontribusinya kepada komunitas aktuari di Indonesia tentunya. Dan juga kepada teman-teman dari moderator yang diinisiasi oleh Pak Ronald yang telah melakukan program ini sudah kita siapkan beberapa bulan sebelumnya, mengingat kebutuhan akan IFRS 17 ini semakin mepet ya Bapak Ibu semuanya. Tentunya harapannya dengan adanya paling tidak webinar atau workshop atau seminar yang sejenis memberikan wawasan kembali kepada kita untuk melakukan benchmarking juga, dan harapan kita juga akan ada diskusi di antara teman-teman nanti dalam forum ini yang saling memberikan masukan dan berbagi pengalaman tentunya ya. Dan juga kepada semua panitia yang membantu acara ini saya ucapkan terima kasih. Program ini terlaksana juga dari dukungan dari teman-teman semuanya dalam partisipasinya ya. Dan kita bagi pada 3 hari session ya Pak Ronald ya untuk saat ini ya. Dengan hari ini dengan topik yang saya rasa cukup menarik juga buat teman-teman semuanya ya. Sekali lagi saya ucapkan terima kasih, semoga acara ini dapat berjalan dengan lancar dan juga partisipasi dari peserta semuanya tentunya juga lebih menambah diskusi kita yang lebih baik ke dalam 2-3 jam ke depan. Sekali lagi saya ucapkan terima kasih dan selamat mengikuti acara webinar ini. Wabillahi taufiq wal hidayah. Wassalamualaikum warahmatullahi wabarakatuh.
Terima kasih atas kata sambutannya dari Bapak Ade Bungsu, Pak. Since the webinar will be held in English, so I will start talking in English right from now on. English mode ya, Bapak Ibu ya, gitu ya. Before we start, let me introduce our speakers today. So the first one is Nicolas Yeo. Probably some of us already heard about his name. Nicolas Yeo, FIA, FISM, FSA, FSAS, founder and actuary. He has a 15-year experience in actuarial work, including life insurance, family takaful, general insurance, general takaful, employee benefits, pensions, medical insurance, reinsurance, and insurtech startup. And then he has developed various technology and software application, including IBM Robot, ReACC, PA Robot. And then outside of traditional actuarial work, Nicholas has significant experience in captive insurance, offshore insurance, artificial intelligence, and data analytics. And then the second speakers will be Kok Ming Wei, actuarial analyst. She has over 1 year experience in valuation and product pricing in general insurance, life insurance, and reinsurance. Apart from that, Mingwei also gained extensive experience in building and testing actuarial software application using programming tools. So she is proficient in Excel, VBA, and R. And then Mingwei has led valuation project for Malaysian and Singaporean companies. So she is familiar with the local regulatory requirements. And then the third speaker will be Billy Tanuwijaya, actuarial analyst. From his name, we know he is Indonesian. Experience implementing IFRS 17 in general insurance company in Malaysia and creating a PA eligibility testing model for general insurance. And then he has experience in general insurance actuarial valuation, product pricing of medical insurance products, experience analysis, annual budgeting preparation for general insurance, and data extraction, mainly using SQL on day-to-day basis. Okay. Billy will explain the sequence of the topics for us, and other speakers will follow. At the end of the webinar, we will have Q&A session. Don't forget, ya Bapak Ibu ya. You can type your question in Q&A dalam bahasa Indonesia juga tidak nggak apa-apa ya, nanti akan kita translate untuk pembicaranya. So without taking longer time, Billy, please.
Ya, halo semuanya, selamat pagi Bapak Ibu. Ya, saya Billy dari Nicholas Actuarial Solutions sebagai actuarial analyst. Iya, oke. Jadi hari ini, bentar, saya share screen saya dulu ya. Ya, saya bisa lihat ya. Oke. Iya. Jadi untuk hari ini kami sudah diundang oleh PAI untuk membawakan webinar IFRS 17 dengan topik Measurements in IFRS 17 for General Insurance. Saya akan bawakan sesi saya untuk perkenalan IFRS 17 dalam bahasa Indonesia. Jadi tenang aja Bapak Ibu, masih ada bersama saya 15 menit dengan bahasa Indonesia ya. Oke, untuk sesi pertama kita akan membawakan liability for incurred claims. Ya, oke. Jadi untuk presentersnya ada saya untuk membuka 15 menit saja untuk menjelaskan IFRS 17, apa sih skop-skopnya segala macam ya, hanya untuk rekap saja lah ya. Nanti akan dibawakan selanjutnya oleh Mingwei untuk menjelaskan LIC with one account, dan habis itu oleh Nicholas, dia akan menjelaskan LIC untuk one whole portfolio. Ya, sebelumnya saya mau share polling dulu nih buat Bapak Ibu. Saya pengen tahu demografiknya seperti apa ya. Apakah sudah mengerti IFRS 17 atau belum sebelumnya. Ya, boleh di-share Pak Yosep pollingnya yang sudah ya. Ya, boleh dibantu dijawab ya Pak Ibu ya. Pengen tahu aja, maksudnya udah mengerti atau belum IFRS 17. Oke, kalau dilihat dari 100 orang yang sudah menjawab, apparently 78% orang sudah pernah mengikuti IFRS 17 training before ya. Mestinya sudah cukup awam lah ya sama IFRS 17 apaan itu ya. Nah, udah gitu apa aja skop-skopnya, udah pada ngerti juga kebanyakan 64%. Bagus. Iya. Tapi untuk measurement, apparently banyak yang belum mengerti ya, 78% say no. Oke. Hopefully our webinar sessions will give you enlightenment ya, supaya Bapak Ibu bisa lebih mengerti lagi cara melakukan measurement untuk general insurance, asuransi umum di Indonesia ya. Oke. Ya. Oke, kalau gitu mungkin sudah cukuplah 108 orang sudah cukup untuk bisa mengerti topiknya ya. Oke, saya share kembali screen saya. Ya, oke. Jadi saya cuma mau rekap aja sebenarnya sekilas apa sih IFRS 17 itu. Jadi IFRS 17 itu objektifnya adalah untuk establishes principles for the recognition, measurement, presentation, and disclosure of insurance contracts. Ya, jadi segala macam kontrak asuransi yang sudah yang pengen diukur gitu ya, liability-nya dan cara presentnya ke financial statement ini akan dibahas oleh IFRS 17. Atau kalau di Indonesia akan di-converge, akan ditranslate full menjadi PSAK 74. Ya. Nah, sebelumnya di perusahaan Bapak Ibu kan sudah mengimplementasikan IFRS 4 atau PSAK 62. Nah, tapi mulai nanti 2025 sudah harus mengimplementasikan IFRS 17. Ya, jadi kalau di Indonesia masih 4 tahun lagi, tapi kalau di Malaysia harus sudah implementasi sejak 2023 ya. Which means next year we will have to start prepare the comparative number to be used for 2023. Nah, ini buat kita udah was-was, tapi buat Indonesia masih lumayan agak chill ya. Oke, jadi kita mau compare apa sih bedanya IFRS 4 sama IFRS 17. Ya, IFRS 17 sama IFRS 4 kok bisa dilihat dari Statement of Financial Position. Nah, kita bisa lihat bedanya itu kalau di sini kan banyak vocabulary yang kurang awam ya buat orang-orang yang nggak ngerti asuransi, terus tiba-tiba disuruh baca apa sih benefits reserve, apa sih unearned premium reserve. Nah, tujuannya IFRS 17 itu pengen supaya kita introduce layman's term buat mensimplify benefits reserve, unearned premium reserve ini jadi namanya liabilities for remaining coverage, yaitu liabilitas untuk sisa masa pertanggungan. Ya, jadi dan pokoknya liabilitasnya dibikin layman term, jadi kalau orang-orang baca lebih ngerti, lebih langsung bisa nangkep apa sih maksudnya IFRS 17, apa sih maksudnya financial statement yang dijabarkan oleh perusahaan asuransi. Kan selama ini kan kayak orang mungkin bingung ya kalau misalnya nggak awam sama asuransi. Ya, oke. Jadi apa sih financial impact di day one buat implementasi IFRS 17? Ya, jadi pas nanti tahun 2024 kita kasih gambaran aja contoh nih. Kalau misalnya di closing balance IFRS 4 itu shareholder equity $100 misal. Nah, habis itu karena mengimplementasikan IFRS 17, kita harus membuat comparative figure di tahun 2025. Which means di tahun 2025 nanti kita harus mempresent angka shareholder equity dari 2024 dengan menggunakan IFRS 17. Jadi kita harus mengubah nih, kita harus restate financial statement kita untuk mengikuti IFRS 17. Nah, jadi kita harus mengikuti discounting lah, terus acquisition expense yang treatmentnya sekarang berbeda, harus di-defer. Kan dulu bisa langsung di-recognize di hari pertama, tapi sekarang harus ada defermentnya, jadi harus ditambahin liability-nya segala macam. Nah, habis itu CSM dan loss component ini topik yang hot banget kan ya di IFRS 17, gimana sih cara ngukurnya segala macam. Nah, kalau misalnya kontrak Bapak Ibu misalnya meruginya luar biasa, tapi selama ini karena cara pengukuran IFRS 4 nggak kelihatan tuh meruginya. Nah, shareholder equity Bapak Ibu tuh bisa turunnya jauh drastis. Nah, ini harus hati-hati banget. Jadi makanya harus diperhatikan banget kontrak di perusahaan Bapak Ibu tuh kayak gimana sih sekarang. Ya. Oke, nah udah gitu setelah implementasi di hari pertama, kan kita harus membuat financial statement untuk tahun 2025 ya. Di tahun 2025 itu ada 4 hal yang bisa terjadi. Nah, di 4 hal ini pertama, grouping may change underwriting results. Nah, grouping may change underwriting results ini karena adanya namanya level of aggregation. Bapak Ibu juga mestinya udah pernah dengar nih ya. Apa sih, gimana sih cara level of aggregation tuh? Terus habis itu harus ada namanya investment component harus di-split lah, terus service component harus di-split lah. Nah, karena itu insurance service result perusahaan Bapak Ibu bisa turun drastis juga karena pengukurannya yang berbeda. Nah, ini harus hati-hati. Nah, udah gitu di perusahaan asuransi umum kan nggak pernah tuh dengar namanya discounting kan. Nah, sejak menggunakan IFRS 17 kita harus discounting. Nah, ini juga harus hati-hati untuk perusahaan Bapak Ibu ya, harus dimengerti kembali gimana sih cara discounting yang benar ya. Nah, udah gitu ada namanya expense of other operating expense yang bisa menyebabkan expense of run may become clearly identifiable. Nah, expense of run ini karena kita harus sekarang ngejelasin banget expense yang directly attributable to insurance acquisition. Nah, ini harus benar-benar di-split dan dijabarkan di financial statement perusahaan Bapak Ibu. Nah, karena itu jadinya bakal kelihatan banget expense yang emang udah parah banget. Contoh, oh ternyata karyawannya terlalu banyak atau terlalu nggak efisien, expense marketingnya lah segala macam. Nah, ini bakal kelihatan banget. Nah, terus income tax and expense may change. Karena tax treatment may change itu karena kita kan sekarang harus pakai CSM ya. CSM itu kan mendefer profit, dan acquisition cost juga tadi sudah belum di slide sebelumnya juga bakal di defer. Nah, expense juga karena itu revenue sama expense perusahaan Bapak Ibu kan bisa berubah tuh. Nah, income tax expense-nya cara perhitungannya bisa berbeda lagi di IFRS 17. Nah, jadi ini harus benar-benar diperhatikan nanti implementasinya gimana. Jujur saya belum ngikutin tax implication of IFRS 17 in Indonesia tuh seperti apa. Tapi nanti kalau sudah ini saya harus follow up sih gimana nanti treatment of tax-nya ya. Oke. Nah, scope di hari ini kita bakal fokus untuk measurement. Kalau Bapak Ibu tahu, IFRS 17 kan scope-nya tuh luas banget. Ada combination and separation lah, terus ada level of aggregation, terus ada recognition, ada measurement, ada modification and recognition, terus ada namanya presentation and disclosure. Nah, tapi kita nggak bakal ngejelasin ini semua, soalnya kita cuma punya 3 sesi ya. Jadi kita bakal fokus benar-benar di measurement ya. Jadi measurement kita maksudnya cara mengukur liabilitas kontrak asuransi, yaitu cara mengukur liability of incurred claims plus liability of remaining coverage. Liability of incurred claims itu kalau di Indonesia kan berarti liabilitas atas klaim yang sudah terjadi. Kalau liability of remaining coverage itu kalau kita translate berarti menjadi liabilitas atas sisa masa pertanggungan. Nah, ini harus ini akan kita jabarkan selama 3 sesi webinar ke depan. Oke. Nah, jadi saya mau bahas sedikit dulu aja sebagai pembuka ya. Apa sih liability di kontrak asuransi itu? Tadi kan udah saya jelaskan ada 2, liability of remaining coverage sama liability of incurred claims. Nah, liability of remaining coverage itu kita bisa ngukur dengan 3 cara, yaitu pertama dengan GMM. Nah, GMM itu kita pakai fulfillment cash flow lah, risk adjustment lah, terus ada CSM atau loss component harus kita ukur. Nah, ini tuh biasanya untuk asuransi jiwa atau asuransi umum yang long term, yang termnya panjang. Kayak contoh asuransi motor di Indonesia kan buat mobil yang dibeli pertama kali kan biasanya kontraknya panjang tuh ya, bisa kayak contoh saya baru beli mobil kemarin di Indonesia tuh saya harus kontrak asuransi 3 tahun sama masa cicilan saya. Nah, itu kan 3 tahun itu berarti kita mungkin harus mengukur dengan menggunakan general measurement model. Nah, ini tapi bisa juga untuk asuransi umum kita pakai namanya PAA, Premium Allocation Approach. Pendekatan alokasi premium. Jadi ini itu applicable buat some short-term contract, such as most non-life insurance contracts. Buat asuransi jiwa yang short-term kayak buat 1 tahun saja, itu bisa pakai PAA. Tapi buat kontrak-kontrak panjang tadi kayak contoh yang saya jelaskan tadi kontrak asuransi motor, nah itu harus kita lakukan namanya PAA eligibility testing. Jadi kita harus ngetes dulu, itu kontraknya bisa nggak sih kita ukur dengan PAA tanpa harus melewati GMM. Jadi kalau misalnya GMM sama PAA hasilnya kalau diukurnya tak dekat, kita bisa pakai PAA saja. Nah, PAA ini yang selama ini sudah dipakai oleh asuransi umum, pada umumnya cara pengukurannya kayak UPR, URR, itu masih kepakai semua di PAA. Jadi kalau misalnya perusahaan asuransi umum pakai PAA, biasanya sih lebih gampang implementasi IFRS 17-nya. Nggak, kalau misalnya pakai GMM, berarti harus mungkin invest ke software lah, atau gimana itu bakal mungkin lebih ribet dikit ya. Nah, udah gitu, habis itu ada namanya liabilities of incurred claims. Nah, liabilities of incurred claims ini sebenarnya masih sama seperti yang sudah Bapak Ibu pernah pakai, yaitu cadangan claim liabilities. Nah, itu sebenarnya konsepnya masih sama, cuman sekarang kita harus mengukur fulfillment cash flow plus risk adjustment. Soalnya kita perlu melakukan discounting. Nah, ini yang harus diperhatikan. Risk adjustment sebenarnya sama seperti dulu kalau di Inggris namanya PAD, Provision of Adverse Deviation. Saya nggak tahu namanya di Indonesia apa ya, saya kurang gitu awam soalnya. Ya, jadi ini yang harus kita bahas untuk 3 sesi ke depan. Sesi pertama kita akan bahas LIC, sesi kedua GMM, sesi ketiga PAA. Oke. Nah, di sesi pertama itu kita akan membahas apa sih present value of future cash flow, arus kas di masa depan, tapi kita balikan untuk nilai sekarang. Gimana tuh cara ngomong bahasa Indonesianya? Pokoknya pengukuran arus kas lah ya, kita jadikan ke present value. Udah gitu, risk adjustment yaitu apa? Kalau kita harus mengukur persentase kalau misalnya terjadi adverse, misalnya hal-hal yang tidak diinginkan yang bisa berbahaya untuk cadangan klaim kita harus memberikan margin 15%, mungkin 10%, saya nggak tahu regulasi di Indonesia seperti apa, kan biasanya tergantung untuk tiap kelas ya, tiap-tiap portfolio. Nah, habis itu karena kita bahas LIC, kita juga bakal bahas insurance service expense, hanya expense saja ya, revenue nanti untuk LRC GMM dan LRC PA, dan juga finance income or expense. Jadi ini itu untuk discounting partnya yang harus nanti diperhatikan juga. Nanti bakal dijelaskan oleh Nicholas. Ya, jadi learning outcome-nya untuk sesi pertama hari ini kita akan mengerti cara ngitung LIC dan cara memprepare LIC account. Nah, jadi mestinya dari pihak Pak Yosep dan pihak PAI sudah men-share spreadsheet yang sudah kami publish di website kami. Jadi Bapak Ibu boleh buka Excel-nya dan nanti Mingwei dan Nicholas akan menjelaskan cara mengisi angka-angka di Excel-nya, nanti biar bisa Bapak Ibu ingat juga rumus-rumusnya seperti apa. Nanti ada 2 Excel yang sudah kita share, yaitu LIC account for one transaction entry, untuk one account saja, dan untuk whole portfolio. Nah, ini tampilannya tuh seperti ini. Jadi, Bapak Ibu sudah boleh bisa buka, dan nanti Mingwei dan Nicholas akan mulai present gimana caranya untuk mengisi angka-angkanya supaya sampai dapat akhirnya neracanya, income statement sama balance sheet-nya. Oke. Sesi saya sudah sampai sini saja. Saya akan pass ke Nicholas. Ya, Nicholas, over to you. I finished my session.
Oke, selamat pagi Ibu-ibu, Bapak-bapak. Saya tak fasih bahasa Indonesia seperti Billy ya, so izinkan saya berbahasa English ya. So I want to take you through the calculations of liability for incurred claims. We hope to use the samples that we have, which you can download. We have already shared the materials, and we can go through this together in the next 1 hour or so. Before we do that, IFRS 17 mainly specifies the measurement of this insurance contract liability, and is basically split into 2 parts, liability for remaining coverage and liability for incurred claims. So you can see there are many boxes on the right-hand side of the slide. This is for liability for remaining coverage, which we'll cover in the next 2 sessions. For today's session, we will focus on the liability for incurred claims. So this is for all the claims that are not yet paid. So currently you have your case estimates, you have your IBNR. This will come under liability for incurred claims, and there's 2 main components inside there, which is the present value of future cash flows. So under IFRS 17, we have to explicitly project these cash flows, unbiased, probability weighted current estimates. So as we go through our example, maybe you will appreciate to see how some of these principles are applied. And then on top of that, there is a risk adjustment. This is specifically for non-financial risks. This is due to the uncertainty of the amount and the timing of the cash flow. So we need to, after calculating the future cash flows and the risk adjustment, we need to apply a present value, and we discount this at the current interest rates for the liability for incurred claims. For very, very short tail claims, if the claims can be settled within 1 year, you can opt for no discounting in the LIC. However, this is unlikely for a large portfolio of a general insurance contract, because most of the time the settlement process will take more than 1 year. So there will be some class that you may not do discounting, but in general, most portfolios will need to have a discounting applied. And what is important is that IFRS 17 has specific disclosure requirement. We have to split the results by present value of future cash flow and risk adjustment. We need to split it by current service and past service. And for insurance finance income and expense, there is an interest accretion component, and there is a change in discount rate component. There's also an option to present this change in discount rate under other comprehensive income instead of profit and loss. And the cash flows, the actual cash flows, in this case, the claims also need to be disclosed. So we will go through this one by one in our spreadsheet. My team member Ming Wei will start with a simple single transaction model, and then I will show you how to do this for the whole portfolio. So I pass it to Ming Wei.
Thank you, Nicholas. Hi everyone, I'm Ming Wei from Nicholas Actuarial Solutions. So today I will go through with you how the claims flow from the journal entry into LIC accounts, and then it will be reflected in the profit loss account and also the balance sheet. Let me share my screen. All right, I hope you can see my screen. So you should also be able to download this copy of spreadsheet from the link in the chat as well through the Actuarial website. So if you have this spreadsheet already, you are welcome to open this spreadsheet side by side with this Zoom window so that you can also do this practice with me. Now, if you have any questions throughout the session, you can just hit it in the chat box, or even let me know your questions by unmuting yourself. So we have prepared 3 scenarios here today. Now we assume this is a coverage period of 1 year for this policy. All right. So in scenario 1, there will be no claim reported throughout the entire coverage period of 1 year. All right. And for scenario 2, there is a claim reported in the first half of the year, and the claim is paid between the second half of the year. Now for the third scenario, what we have is the claim is reported during the first half of the coverage period, but yet until the end of the year, the claim is still not yet paid. So it will be carried forward to the next year. Now we go into scenario 1. All right. So as you can see, our example, we have the valuation period of half yearly. So for journal entry, we have as at 30th June, we have as at 31st December. For LIC account as well, we have both June and December. And whereas for the balance sheet and income statement, this column is for June, this is for December. So since we have a half yearly valuation period, so we also assume that the claims are run off by the next valuation period, which is the next half year. So let's start with the premium register. All right. So imagine we received this premium on 1st of January 2021 of $100. So we also received the cash of $100. Now we will assume, let's say the actuary has calculated and decided to use the ultimate loss ratio of 60%. So this is the simplest method that we use, the ultimate loss ratio method, to predict the estimated claims for this period. All right. So as at 30th June, what we'll have in the expenses, which is the insurance service expense for the current period, will be $100 of premium multiplied by the ultimate loss ratio. So 60 will be the claims that is estimated to be incurred throughout the entire year. So, but right now we only value it up to 30th June. So what we do is multiply by 0.5, half a year. So immediately it will debit the expenses and also credit the LIC account of 30. So by the end of year, it will be the same thing. We'll have $100 multiplied by the 60% loss ratio multiplied by half a year. So we'll assume from 1st of July until 31st of December, we have 30 claims. Now, what we want to do in the second half of the year is we want to evaluate whether the past claims estimate are true, or is it we have to make adjustment to it. So we made the adjustment in the insurance service expense of the past service. So what we will do here is we will have 30 minus by 0, because we do not have any claims that incurred in the second half of the year, right? So this means that actually we estimated $30 for the claims, but the claim never happened. So we need to release the fund from the reserves. So in order to do this, you can see when we add on to the reserve, we do it in the debit column. But when we need to release the reserve, we do it in the credit column. So it will automatically debit the LIC account. For cash for this period, there's no claims at all, so it will be 0. All right, so now we'll move on to the LIC account. We start with a 0 opening balance. So let's say we have this insurance service expense of the current period. We'll take this amount from the journal entry immediately. So we will take from the LIC row. So as I can see, this is the LIC row. We have the 30 in our LIC. There's nothing in the past service, so 0 for this, and nothing for the claims paid, so also 0 for this. Hence, we have a closing balance of 30. And this $30 will be carried forward to the next valuation period, which is 1st of July. We have 30 opening balance. So in the second half of the year, the current period, which is from 1st July to 31st December, what we have for the current period is actually 30 from the LIC account. And we'll have the change in past service. For the change in past service, we'll take this column, this cell, but instead we need to negative this one. We need to deduct it from our LIC account. Hence, it's negative $30. The claims is 0, so no claims for this period. And we end up with a $30 of closing balance. And then also similarly, this closing balance will be brought forward to 1st of January 2022 next year. Now, up until this point, is everyone doing okay? Yeah, I'll continue with the next one, where we move them into the balance sheet. Now, for cash for the first half of the year, it will be 0, no claims reported during the first half of the year. And you can see the green box here, right? Similarly, the green box in the closing balance. So this is our prompt to you that saying this closing balance will go into the liability column of the balance sheet. So we'll take, in this case, is K17 for this. So we have $30 in the LIC for the first half of the year. And the second half of the year, we also have 0 cash because no claims are incurred. And we'll take the closing balance from the LIC account. Now we move on to the income statement. In the current service, we'll take this entry from the journal entry. Yeah? So for this, we'll take the expenses row. All right, as you can see, this is the expenses account, this is the liability account. So if we take the expenses row, it will be 30 for the current period. And there is nothing in the past, so it will be 0. And of course, this is not a complete income statement yet. We have other expenses, other income, and insurance revenue in this. So when we sum up the whole thing, all right, we'll take the revenue minus by 30, the expenses, and hence we get the profit loss. So the profit loss for this claim from this policy itself will contribute to negative 30 to the profit loss account. And next, we have the income statement for the second half year. For second half year, current service, we'll take it from the expenses account as well, 30. And for the past service, remember the past service, we are releasing fund, right? So this is, instead of an expenses, this is credit. So this is actually an income for us, or we say a revenue for us. So we will negative 30. All right. And we do not record any other expenses, revenue, and income. So we can see the profit loss end up, we have 0. This is because 30 is the claims that we expect to incur for this period of time. But instead, we earn back the 30 that we do, the claims that do not incur during the first half of the year. All right, so it's the release of funds. So it becomes an income for us. So expenses and income, they contra out and become 0. All right, so this is the first scenario that we go through. We'll do the same thing in the second scenario, all right, a little bit different this time. So this time we have the claim reported during the first half of the year, but the claim is paid during the second half of the year. So let's see at the register, we have $100 of premium paid for this policy. And on the 20th of April, we have $25 of claim reported, but the claim is only been paid on 31st of August. All right, so also the $25 will be paid. So what we do here, similarly, we have 60% of ultimate loss ratio. So we have done this before the insurance service expense. This is the expected claims for this 2 period. So what is different now is the past period. So for the past period, we will take the 30 from the first half of the year, what we estimate. So 30 is our estimated loss, minus by 25, which is the incurred loss. So what we have here is $5. So this $5 is the claims that is not paid, the reserve that is not used. So we will release this reserve. So for the claims, we'll take the $25 from the cash register. So notice that the past service expense and the cash is recorded in the credit account, and the liability is on the debit account. Now we'll move on to the LIC account. So this is the same as the first example. We have 30 for our current claims, 0 for the past, and 0 for claims paid. Hence, we have the 30 closing balance carry forward to the next valuation period. We have 30 for the incurred loss as well. And for the past, we will take negative 5 because we are taking this debit account. So we will take negative 5, hence we negative $5 here. And for the claims paid, we'll take negative of the LIC account of 25, which means we already paid out $25 to the policy holder. So end up we have a closing balance of 30 as well. As we move on to the balance sheet, similarly, we have 0 for cash, 30 closing balance. It's brought forward from this column. And this green cell as well, we'll bring it to the 30. But let us look at the assets, the cash that we need to account for the payout of $25, right? So this one will take negative as well, because this is a cash payout, negative of the assets here, which is the cash of $25. Hence, we have negative 25 in the assets column. Now, from the income statement, current service is just the 30 that we have in the expenses, 0 for past service. So this is similar as the previous example. We have negative 30 in our income statement for the first half of the year. Now, for the second half of the year, insurance service expense, we have the current service. Let's go to the journal entry again of 30 for current period. And we have negative 5, as you can see, this is the expenses line, right? So we have negative 5 for the past. So we're releasing the fund. End up, we have a negative $25 of loss for this second half of the period. All right, so up until now, I see some chats coming in. Let me know if you have any questions. Of course, we have the third scenario here, but this is the scenario where we prepare this as a homework for you. So the third scenario, you can go through it by yourself. All right, maybe during the break later on or during any time of this week. And if you have any questions regarding the third scenario, you can't get the answer, then feel free to let us know later on before the end of the session or even in our session next week. All right, I'll just have a go through of this questions. The calculation based on policy level or aggregate level. So this example is a policy level example, and later on Nicholas will give an example of the aggregate level of the entire portfolio. Yep. So why is the revenue not filled? All right, the revenue will go into the LRC account instead of LIC. So our topic today is just the liabilities for incurred claims. So you can see this $100 is not filled into the revenue or so. That will be accounted in the LRC account, which will be covered for next week. I think that's all from me. We'll go into a short break. I will pass the stage to Park Ronald. All right.
Yeah. Thank you, Ming Wei, for the presentation. And then after this, Nicholas will continue, yeah? Ming Wei.
Yes, I will continue.
Okay. Nicholas, sorry, just to make sure, will you share the templates with formula, or because the one that we received is without formula?
Oh, okay. We can do that, but there's already a recording, right? Or you prefer to have the template? Okay.
Filled by formula, because it's easier to trace the formula.
Okay, sure.
Yeah. Thank you, Nicholas. You want to continue?
But I thought we are going for a short break first.
It's okay. I think you can continue, Nicholas.
What time should we go for the break, Ronald?
Only 5 minutes, but we can continue, I think, because the material is just not too complicated at the first material, so you can continue.
Okay.
Yeah.
Okay. Okay, can everyone see my screen?
Yes, Nicholas.
Okay, so what I have here, in my screen is actually the full portfolio of the example. So you can see that we have so this is what normally a general insurance company would have from their existing work. So in this example, we are at 31st December 2020. So there is a current period cumulative paid claim. So that means at 31st December 2020, we have this paid claims triangle. So I think most of the general insurance company have this. Some of you may also use other methods to do the claims triangle. So for today, we use this chain ladder or the link ratio method for the paid claims. This is the example that I think is easiest for me to present in this session. So what we actually want to show you is that this is the existing work that you already have. You have a triangle, you have the development factors and the ones that you selected. And from here, in the past, if you get to the ultimate claims, then this will be your claims liability. And then for IFRS 4, the work will more or less be completed. So you would have the best estimate ultimate claim, and then another ultimate claim inclusive of the PAT or the provision for adverse deviation. So in the past, normally this is a simplified version of what is a complete set of work that most general insurance company have, or also the short-term. Also, some life insurance company with a short-term portfolio will have this. Okay, the first thing we need to do for IFRS 17 is that we need to project the future claims payment. The reason we want to do this is because we need to have the present value of future cash flow. So what happens is that so the first thing we do is we extend the previous work from the ultimate into the amount that is unpaid. So the ultimate claim less the paid claim is the unpaid claims. And these unpaid claims, actually, we need to project this cash flow for the remaining runoff of these claims. So for this part of the projection, some general insurance companies would have already done this. Some general insurance company has not done this, but maybe I can just give a simple example. So for example, in year 2016, based on the past claims here, basically we have identified a pattern, and the total unpaid claims calculated is 13,935 given in this column. So what we need to do is we actually need to split this into different years, and actually what we have. So for example, the 1 year after this will just be equal to the latest latest cumulative claims multiplied by the development factor -1. So we want to know what will the incremental paid claims be on the next year and the subsequent year. We can use the development factors from the paid claims triangle, or we can use other methods. But what we really want to do is to get the future claims payment at best estimate, and also the one with the PAT. So for just to be clear, the part with the PAT in this here is actually the best estimate plus the margins here, which in IFRS 17 we will call the risk adjustment. So this will be the starting point of our work. And if you scroll to the spreadsheet over here, basically what I have done is I have also collected the discount rates for last year and this year. The objective of this is so that we can populate the interest accretion and the change in discount rate. If we go to the LIC account, so we can see that basically it is our intention to populate all these items here so that we can complete this LIC account with the closing balance here. So actually the first step the first step to do this, we actually want to calculate the closing balance. So what we do is I have brought back all these projected future claims payment. I just take the same value from the previous spreadsheet. So these are the projected future claims payment. What we need to do is actually we need to apply a discounting. So to apply a discounting, I have also what I've also done is that over here in this part of the spreadsheet, I've actually brought together the discount rate. So this is the discount rate as at the valuation date. So normally for general insurance company, we would use the government's yield as the discounting rates here. So there are in IFRS 17 there are top down and bottom up ways to do the discounting, but we won't discuss the discounting in detail today. Let's assume that we have agreed on a discount rate. So what we need to do is we need to take the undiscounted value and simply apply discounting. So this step is actually not very complicated. So what we want to do is we want to take 602 and then we want to divide by 1 plus the discount rate over here to the power of the expected year, but we expect this to be a half a year. So the discounted value is basically 591 from 602. So let me lock in all the cells so that we can do for everything else. So we would do this for the present value of the future claims payment and also for the risk adjustment part. So the risk adjustment part here is basically just the best estimate with the PAD minus the best estimate. So when we apply a discounting, so this is the this is undiscounted future claims as at 31st December 2020. Apply discounting, this would become our closing balance in the liability for incurred claims account. So when we move to the liability for incurred claims account, tab, right, you will be able to see. So this will be our closing balance. So the closing balance, which is the liability as at the current date, is simply the present value of all the future cash flows, the future claims in this case. For this example, for simplicity, we assume that this claims handling expenses is already part of the claims, and then also the related risk adjustment. So with this, actually, we have already have so normally what we do is that we also split this by the accident year. The objective is only so that we can see this clearly, but the amount that we actually eventually put into the financial statement is simply column J, which is the total. So this is what we need to do for the closing balance. Okay, but after having the closing balance, the issue is that we need to reconcile all these. Don't worry about the values here because I haven't completed this. So this is because we have prepared the link, so you don't have to copy and paste so many things. But now we need to make sure that we have the correct amount for the insurance service expense, insurance finance income and expenses. So we go to the step 2. Okay. So in step 2, what we want to do is we want to calculate this change in the discount rate. So how do we calculate the change in discount rate? Basically, we obtain the same projected future claims payment. We do not need the latest accident year. The reason is because we want to calculate the difference between the discount rate used in the last valuation and this valuation. But in the last valuation, as at 31st December 2019, there is no claims for accident year 2020. Okay, so what we do is that if you look over to this part, we would need to take the discount rate for this year and the discount rate for last year. Okay, so our objective here is to quantify, because in 2019 these were the discount rate. In 2020 the discount rate has changed. Because the discount rate has changed, the liability would have increased or reduced. So we need to take these projected claims that we have, and then we will discount it again with last year's discount rate, because the closing balance is at this year. We take this for last year, and then we will be able to quantify the difference. Okay. So what do we do? We apply the same formula. We start from 602 divided by 1 plus the discount rate to the power of this year. So we are still all working on 31st December 2020. So allow me to log in all this. Sorry, I made a mistake. Should be on 602. So we would have the claims payment discounted based on the previous discount rate that we have used. So the difference between the discount rates is then basically given in the final row here, which basically we will take the difference between the claims discounted by the two discount rate. So why do we will do the same thing for risk adjustment. Why do we need to do this is because in order to prepare our LIC account, we start from the opening balance, and then we finish with the closing balance. So we need to reconcile it step by step. And one of the reasons the closing balance is different from the opening balance is because of the change in discount rate. So because the discount rate has changed, excluding anything else that has changed, this will actually have an impact from to the opening and the closing, and this is required to be presented under insurance finance income or expense. So this part, so step 2, basically the objective is to complete these 2 columns here. Okay, and then now we will go to step 3. Okay, for step 3, what do we want to do is we want to calculate the interest accretion. So because we have discounted the liabilities in the closing balance, right? So after 1 year, what happens is that there is 1 year time, and hence because of the time value of money, we need to allow for the interest to increase. Yeah. So this interest accretion, what we do is we take the future claims again from the current year. So we take this directly from our input tab, which is our projected paid claims. This is what we would have last year had we done the same thing last year, right? But we need to take the discounted rates at the previous valuation date, and then we discount this part. So you can see that we are moving step by step. So just now I was changing the discount rate from this year to last year. So now we are in last year's discount rate. Now we want to quantify the difference between the time of 1 year has changed. So you can see that I need another last year's discount rate, but I need to move this by 1 year. So it was 5.65 for 2 years. Now it's actually 5.65 in the first year. So I need to do the same. I need to apply the same discounting. However, this time I need to apply this for for another year so that we are able to see the difference here. So it will be 2020. This part will be 2021 minus 2020 minus 0.5 plus 1. Okay, so because of this is from 2019, we would have projected this to be in 1.5 year time, but when we come to 2020, it's only in a half year's time. So let me again quickly lock up this formula. But the main difference here is that we apply this plus 1. So when we calculated the 2021 claim in 2019, we had to discount it by 1.5 years. At the end of 2020, we only discount it by 1 year. So this is, sorry, by half a year. So this 1 year is the difference quantified by 587 minus 554. So using this formula is one way to calculate your interest accretion. So we apply the same thing for the risk adjustment. And the main objective of this, again, if you go back to the LIC account, what actually we want to do is that we are able to calculate the other part of the insurance finance income and expenses, which is the interest accretion. So we need to calculate these two parts because this is due to the time that has elapsed from 2019 to 2020. So between the opening balance to the closing balance, the numbers have changed because the time has passed. Yeah. So now we have dealt with both the insurance finance income and expense. So the more important one is actually the insurance service expense, which we will go to step 4. But Ron, do we need a break? Should we continue?
Yeah, it's okay to continue, Nicholas.
Okay.
Yeah.
So I will continue with step 4. So in step 4, what we want to do is we want to calculate the change in past service. So service is basically the work or the value that the insurance company has provided in this period. So if we are doing an annual valuation as at 31st December 2020, so service will be for the year of 2020. So past service will be anything that has happened from the past until 31st December 2019. So because this is no longer relating to the latest year, so these are all the past service that we have. So what happens is that the past service, because the claims is still not yet run off, so the claims may increase or decrease, and we need to quantify this. So we obtain this. We still take the projected future claims payment, which we have calculated from as at 2020. We obtain the discount rate from the previous valuation date. This is 2019, so we are in the 2019 time. So the next thing we want to do is actually we want to calculate the discounted value of the current period's triangle at the previous valuation date using the previous discount rate. So the objective of doing this is so that we can actually quantify. This is the first half of the step, right? To quantify this change in the past service. Okay, and then after that, right, we actually want to take the projected claims payment from the previous period triangle. So over here, what we'll introduce is actually from the work that we have done in the past, right? To take, and then we will, when we compare the difference, we will get the change in the past service. So this discounting to 554 is something we have already done in step 3. But what we need to do is to take the discounted previous period claims. So what I have also set up here in the input as an input, right? What we need to do is actually we need to have previous period of projected claim. So let's say this is the claims triangle in 2019. We do the same projection, but here I've skipped one step, and the sense that this is the discounted value that's collected. So basically, these two triangles here, right, are basically the equivalent of what we have done in step 1, but for 1 year ago. So when you do your work, you need to take the previous year's discounted triangle and then store this for the purpose of this step 4 calculation. So in step 4, basically, we will just take from the input. So these are the past results. The reason we want to take the past results because with this we can quantify what has changed. So if we take 2014, what we are seeing is that in 2020 the assumption from our triangle is that 2014 is already run off, but in 2019 it was not run off. So the change in estimate is 48. So basically, this liability from the past has already been released. For example, for 2015, we are saying that the undiscounted value is 602 and then discounted value is 554. But last year, this was a 55697. The reason is because we expect that this 5114 here has already been released this year and to actually pay the claims. So this is just a change in the estimated liability. So this is how much the reserve has released. So after identifying the reserve has released, we need to deduct it with the actual paid claims. So we actually have this. Actually, should have this also paid claims from our triangle earlier. So I would take this from the input, which is the paid claims, excluding the one for this year because we are doing this for last year. Yeah. So this is the claims that has been actually paid. So what happens is that the discounted value was 5114, but the actual claims paid was 4490. So basically we release more reserve than we have paid. So then this change in past service will basically be change in estimates and the paid claims here. So we do this for every accident year, and we also will do this same thing for the risk adjustment. The difference. So the difference, I think, there are two things for the risk adjustment. One is because of how actually my data is arranged here. So sorry, my screen. I think my screen is lagged a bit. Let me get it back to what it should be first. The input. So because here what I've done is this is the best estimate plus the PAT, so I have to subtract it with the best estimate to come up with the risk adjustment. So maybe some of you may have a question why we do the risk adjustment like this. So in the standards, there are many ways to do the risk adjustment. We don't actually go through one by one. We just assume that for simplicity, whatever you have in the past is for the PAT is a good starting point for the risk adjustment. But this one depends on how your company is currently doing it. It may or may not be the case. So we set up these triangles for the risk adjustment. However, because the risk adjustment has nothing to do with the actual cash flow, it is an amount to compensate for the timing and the event. So there's actually no paid claims amount here. So the change in the risk adjustment estimate is simply the change in the past service. So with this, we will actually go to the LIC account. So we have actually quantified what is the change in the past service. So in general, what happens is that when the release in the reserve is more than the claims paid, then we will have this release in the past service. So this is step 4. We have 2 more steps. One is to get to the current service, and one is to get to the claims. So let's go back. Let's go to step 5. So what we need here is just to get the claims paid, because when you pay the claims, we need to reduce the liability. So we release the reserve to pay the claims. So we have this is the same as what we have done earlier. So we want to take the paid claims, the whole column. So remember I said that what we need to do is we need to put in a negative amount into the liability LIC. So this is the actual paid claims that you will actually take from the database. This is the actual cash flow that is paid, and the objective of that is basically to fill up this column of the cash flow. So with this, actually we have completed this cash flow, and then the step we need to complete step 6. So step 6 is just for current service. Okay, so you can see that for 2014 to 2019, all these things are nothing to do with the current service, because for policies that's written in the 2020, it cannot have a loss year less than 2020. So what do we need? What do we want to do for step 6? Basically, we want to take the paid claims for 2020, and also any increase in reserve due to this. So the paid claims for 2020 is simply taken from the input, and then for the unpaid claims, you may be also tempted to take from the input here, because the unpaid claims is just the ultimate minus paid. But we have to remember that we have actually performed the discounting, so we want to take the discounted value, not the undiscounted value. So similarly for the risk adjustment. But risk adjustment is not there's no actual cash flow for risk adjustment. So for paid claims is 0, but for the unpaid claims, actually we have the same number here, which we have derived in step 1. Yeah. So then with this, actually we have completed the whole LIC account. So you can see that this is the opening balance, which is actually taken from our input based on the last year's results. And then this amount will change because of the insurance service expense and the insurance finance expense. So one of the things that IFRS 17 need to do is to split between the current service and the past service, and also split between insurance service, which is related to claims, and then the insurance finance income and expenses, which is related to the investment part, yeah, so the discounting and so on. Now, if your portfolio is short tail, then of course you don't apply discounting, and the insurance finance income and expense will actually be 0. So after we have completed this LIC account, then the next part will be to prepare, right, the relevant journal entries. So what we need to do is we need to put this into the income statement and the balance sheet. So the income statement basically comprised of service expense and finance expense for the liability for incurred claims. Yeah, for the liability for remain coverage, of course, there'll be insurance revenue. So just to quickly complete this exercise here. So the insurance service expense from the current present value of future cash flows. And then from the risk adjustment, which is just one line below. So we take this from the current service. Then the next one is we take the past service. So because it's a negative amount, so we have to credit the insurance service expense because we are trying to reduce the liability for incurred claims. And then for the interest accretion, so we want to split all this by the present value of future cash flow and risk adjustment is because we can then reconcile them together nicely, so that the risk adjustment and the PVFCF actually stands alone. Yeah. And the journal entry for the claims paid, yes, we need to be mindful. Yeah, the claims paid does not actually get into the P&L under IFRS 17 because the expected claims has already been allowed for it. So once the debit credit has worked, right, you'll be able to see the current service and the past service in the insurance service expense, insurance finance expense, interest accretion, and the change in discount rate. So this is one way to actually get all the different items into the income statement. So in terms of the cash, in terms of balance sheet, what we have paid out is the cash. And then what we have actually, and then we need to actually take all the items that has increased in the LIC, right? But not those that's excluding the cash. So one way to do it is that we take the sum ifs here. We want to take everything in column P. If the column M here is the LIC. Okay. If M is LIC, so this is a credit, and then minus the same thing. So we want to have column O if M is LIC. And then we need to add back our opening balance. So the LIC starts with J13, which is the opening balance, and then with all the movements that affects the LIC. LIC is a liability, so credit liability means increased LIC, debit liability means a reduced LIC. So this is so with this we can complete this is not the whole balance sheet, but the contribution to the balance sheet for the parts that is related to the LIC. So pay actual claims of 795,000, and then 1.5 million is a increase is the closing balance of the LIC, which you can see will match this number here based on the sum of our closing balance. So when we get to this step, then basically the accounts are tied up and the LIC part is completed. So I think this is with this the example, the demonstration is completed. Maybe I'll start to take some questions. But Ronald, should I pass it back to you?
Yeah, thank you, Nicholas, Billy, and Mingwei for the presentation. It gives us insight and deep understanding about the LIC. Again, with this technical templates, I think we can understand the LIC better rather than only just a PowerPoint, right? Okay, I think there is two questions, Nicholas, from the participant.
Sure.
First one from Taba Wisnu. Hi, Nicholas. Is change in discount the part that allowed to move to OCI? How is your view about this? And then will it give us an advantage by moving this unlocked part to OCI, or it will better for us to let this in insurance finance income or expense?
Okay, so,
yeah.
So for this, so I think you all still can see my screen, right? So I think maybe I explain a little bit. So for the part of insurance finance income and expense, it comprises of two parts. So one is the interest accretion and the other one is the change in discount rate. So there is an option instead of putting this change in discount rate in the P&L, we can put the change in discount rate into the OCI. The main reason to do this is because under IFRS 9, there is also a change in discount rate for your credit related instruments. So for example, if you have bonds, okay, and in the IFRS 9, there is also this accounting decision that you can make. So normally companies will make the same decision. So if your assets go into OCI, your liability also goes into OCI. So there is match. If your asset is in the P&L, then your liability is in the P&L, then there is matching. If you put them into different parts, then there may be a mismatch. It may or may not be good. It depends on whether your assets are they interest rate sensitive or not. Some companies have interest rate sensitive asset like bonds. Some companies don't have so much bonds. So the idea is that the other thing is also it depends on each company, because one of the things will change under IFRS 17 is your KPI. So it depends how the KPI of this change in discount rate, whether it's your KPI the P&L or your KPI is the total income. So the concern is, of course, if suddenly the interest rates change a lot, then your KPI will be affected. So this is not good from the management perspective. From the measurement perspective, it is the same. And I think if the asset is not interest rate sensitive, then put into the OCI will give your P&L stability. So many companies will need to take some time to test this out, because once you complete the projection, then you can see what will happen.
Okay. Sorry, Nicholas, just additional question from me. So if you say it's separate from OCI, so what is the usually the component of OCI itself?
Is this same? So this change in discount rate is the same, but it will just instead of let me move my. So instead of appearing here, it will appear somewhere here. So when it is OCI, it does not hit your profit and loss, but then it will go straight into your retained earnings.
Okay.
The idea is because change in discount rate is actually not within the control of your business. The profit and loss is actually based on what you have done this year, right? But so there are other things that are in the OCI, for example, like asset revaluations and things like that.
Yeah, I see. Thank you, Nicholas, for the explanation. And then the second question coming from Ivan Faisal. So the LIC example calculation is based on claim paid data. What about the calculation of claim reserve? Is the methodology equal to projected claim paid, or just put the amount of claim reserve as currently applied?
Okay.
Yeah.
Okay, so if we go back to the input here, what I have done is I have started from the claims paid triangle method. Okay, whatever is the method that you use is not important, because any method that you use will actually that you currently use will actually give you the ultimate claims.
Yeah.
Okay, the challenge is to split these ultimate claims into this projected claims cash flow. We do not want the projected change in claims reserve. Here we want the projected claims payment, because we want to discount at the time when the claims is paid. So maybe some of your current method use incurred claim instead of paid claim method for the triangle. So then you can also work out this projected cash flow. It's just that the method will be a bit different from what I have shown here. What we need to estimate in the future is when the timing of the claims payment, which is the cash flow, because the change in claim reserve is not really a cash flow.
Okay. Yeah. So just make sure, Nicholas. So no matter what kind of method that you use, but at the end, the one that we the figures that we use for the calculation is on current period incremental future claim payment, right? So it's a ultimate claim. So no matter what the method that you use, the figures that we use for the calculation is the ultimate claim. Is that right?
Yes.
Okay. Thank you, Nicholas, for the explanation. I think probably there is someone else that want to ask something. Please. We still have probably 20 minutes. Silakan Bapak Ibu kalau ada yang mau tanya lagi. Kita tunggu. Yeah. Nicholas, there is a question from Faisal Anggoro. Sometimes we don't have any detailed data for example, statement of account in reinsurance. So I guess Faisal Anggoro is from a reinsurance company. Could you please give advice for this case? How do we generate the triangle? Thank you.
Okay, so if you look at this page, so what I have put here is actually the starting point is the past claims, which is the data. But actually, from the past claims to the ultimate, we put in a lot of assumptions. So by the time we come to here, this future paid claims is actually our assumptions, which is guided by the past data. So if your past data is not so detailed or not so accurate, you still can make the same assumptions. You still can do the same thing that you do for IFRS 4. You have to make the assumptions and then come out to the ultimate. So basically, one of the implication I would say is that if this projection is based more on assumptions than on past data, likely is that you make some compromise in the sense that your risk adjustment increase, because your risk adjustment is based on your expected timing and amount. But if you feel that the expected timing and amount, you're not so confident about it, so you increase the risk adjustment a little bit to reflect for this uncertainty. So because normally one of the challenge is that for IFRS 17 we are required to do the gross projection and the reinsurance projection, and there's a lot of disclosure. So very often the reinsurance part, currently the data is not so clean. But what happened? So, for example, what I've shown here is that this is like a paid claim triangle. So, for some other lines of business, maybe you use a expected loss ratio method because you don't have a triangle. But using the expected loss ratio method, you still have an ultimate. From the ultimate, maybe you still can assume, how much will be paid in the next year, how much will be paid in the subsequent year, and there will still be a way to come up with the projected claims payment.
Okay. Yeah. Thank you, Nicholas. I guess it's already clear, and then we can continue to next question from Tessa Sarah. Hi, Nicholas. Do we need to separate losses claims? And are there any methods that we need to use to set the PAD factor?
Okay, so some companies would separate the large loss from the other losses. Some companies have many triangles, so there's a attritional loss, large loss, catastrophe, etc., etc. So whatever that you are currently doing, because this is based on your actuarial judgment, right? How many triangles you want to split, how to split, all these things you can continue to do. What is different in IFRS 17 is that when you present the results, there are different way of grouping the results. But this doesn't necessarily mean you must change the way the actuarial work is done. So after the actuarial work is done, you can still combine the results. You can still split the results according to what is your accounting position. So I think your reason for separating large loss for IFRS 17 and IFRS 4 is the same. If you think that the large loss distort the pattern, you have to separate it. I think the second question is, what are the methods that you need to use to set the PAD factor? So the standard does not prescribe a very specific method to set the PAD factor. Some companies use similar to what they have in IFRS 4. Some companies use what is similar to the local RBC. Some companies use a cost of capital approach. This one more related to like European companies that have Solvency II. So I think this is not the method to set the PAD factor. From our experience, the auditor can accept a wide range of method.
Okay. So just to make clear, Nicholas, so no matter if you separate the large loss or attritional claim, but at the end you have to combine it again, then you have to produce the one that in the blue color, right? So we just combine to produce the ultimate loss, then to calculate to continue the calculation. And then
or you can come all the way or you can split it, come all the way until here, and then only you can do the combine.
Okay. Yeah, thank you, Nicholas. Any other question? Silakan Bapak Ibu, kalau ada pertanyaan lagi. Wah, yes, there is a long question, Nicholas, from Taba Wisnu. Since this measurement will be the standard we have in 2025, because in Indonesia it will be implemented in 2025. I think it will impact us. The actuary will be demanded by related department. For example, PPM team to do some allocation for some account in PL, include the discount and risk adjustment part into some more granular level. For example, profit center. Is that okay for us to do that in this IFRS 17 standard? I mean, in IFRS 4, maybe we only do an allocation in IBNR, 1 or 2 account gross seeded, and it is easier to explain the result. But cannot imagine if we did the allocation by many account like that. Can you give your view about this? Just to simplify the question, I mean about the allocation of the risk adjustment or something, right? How about your view about that, Nicholas?
Okay, because what happens is that to complete the financial statement is one thing. To translate the financial statement into into the KPI for the profit center. So you have to do the allocation. So you need to know which business unit has contributed to this LIC, right? So the allocation has to be done. The challenge is that now the allocation, because IFRS 17, they have all these different unit of accounts and a different way of grouping and splitting. So this allocation will be actually very complicated. So what we actually do in our system is that we actually create this rule, right, which is called a portfolio class and a subclass. So portfolio is the biggest one, class is the medium one, and subclass is the smallest one. So normally the actuarial work, the assumptions, how the actuary want to do the work is the class. So from the class, you can actually add up to a portfolio. So in a portfolio, there can be a few classes. But then below the class, there can be many subclasses. So some of these subclasses are for agents, some of these subclasses is for different line of business, because there is a use for this thing for various reasons. Sometimes your regional has a different way of splitting the class compared to the local statutory basis. So I think this allocation remains there. In fact, it becomes a lot more difficult as this participant has suggested, because this mapping become very complicated. But it still needs to be there, because if you do not do this allocation, if you do the work one by one in a very granular way, the work becomes a lot more. The allocation is supposed to simplify your work, but the allocation now has become more difficult. So this is the problem.
Yeah. So if you more granular, it might lead you to it makes it gives you difficulties, right? Because so many works to do. And then the other thing that it might lead you to onerous contract. Is that right, Nicholas?
Yes, it could be due to onerous contract, separation of contract, combination of contract, many of these problems.
Yeah. Thank you, Nicholas. Ya. Bapak Ibu, mungkin ada pertanyaan lagi, silakan. Kita tunggu, Bapak Ibu silakan. So Nicholas, just a question from me while we waiting for the other question. So today we only study about LIC, right? So the other part will explain us about the LRC, and then we will combine it together in a calculation. Is that right?
I think in our example, it will still be separate, but then because after the LRC and the LIC, there are still other items in the balance sheet and the profit and loss that is unrelated to the IFRS 17. So when you put both of those things, you put all these things together, you will have the complete financial statement. So for example, things like investment income tax, these things has nothing to do with IFRS 17. The existing accounts still apply. So for IFRS 17, we mainly have two deliverables: is the LIC and the LRC.
So what we study is actuary related. Yeah.
For the measurement. Yeah.
Yeah, for the measurement. Yeah. Any other question, please? Okay. I guess there is no other question. We can close this webinar. Bapak Ibu, jangan lupa untuk mengisi kembali feedbacknya, dan satu lagi itu absensinya ya. Linknya sudah di-share di chat, mohon diklik lalu diisi. Sebelum kita akhiri webinar ini, kita akan foto bersama terlebih dahulu. Pak Yosef bisa dibantu? Pak Yudi?
Ya.
Foto bersamanya.
Baik Pak, Nicholas, can you stop sharing the screen? Okay, thank you. Ya, Bapak Ibu silahkan dinyalakan dulu kameranya ya. Silahkan siapkan gaya terbaiknya. Oke, smile everyone. I will count. There will be 6 slides, so there will be 6 parts of documentation. Oke, 1, 2, 3. Oke, ya 1, 2, 3 senyum. Oke, ya 1, 2, 3. Smile everyone. Oke. 1, 2, 3. Oke. Wah, ini semuanya on kamera ya. Thank you. Oh, ternyata slide keempat belum semuanya. Oke, 1, 2, 3. Oke, thank you. Slide kelima belum ada, slide keenam belum ada. Baik, sekian Pak Ronald.
Ya, Bapak Ibu melanjutkan yang tadi untuk menutup webinar ini. Terima kasih untuk partisipasinya dari Bapak Ibu. Thank you Nicholas, thank you Billy, and thank you Mingwei for your presentation. Bapak Ibu, kami ingatkan untuk minggu depan ada kemungkinan akan digeser dari tanggal 11 menjadi tanggal 12. Tapi untuk pastinya nanti Bapak Ibu akan dihubungi oleh panitia melalui WhatsApp ataupun melalui email. Oke, terima kasih untuk kehadirannya dan partisipasinya dan pertanyaannya terutama ya yang makin memperjelas pengetahuan kita tentang IFRS 17 ini. Terima kasih atas kehadirannya. Sehat-sehat selalu, sukses selalu untuk Bapak Ibu. Terima kasih. Sampai ketemu lagi minggu depan.
Itu Citra Kirana yang tempatnya Pak.
Terima kasih semuanya.
Ya, thank you Bapak Ibu.
Oh,
Izin live.
izin live.
Terima kasih semua.